Hello everybody, my name is Andrew. In today's video, we will clearly analyze the concept of imbalance. What is this formation? How does it look and form? Your perception of the market will radically change after this video. My analysis is based on imbalance and liquidity. Based on this, I build my point of view, with which I make the decision to enter into an agreement. Imbalance is a formation consisting of 3 candles. It reflects the institutional flow of orders in the market. Its formation occurs due to the fact that in a specific price range, there is no liquidity from one of the parties. In other words, there are only sellers or buyers. The diagram shows a bearish imbalance. For its appearance, we must see the formation of 3 clear candles, where the low of the first candle and the high of the third candle will reflect the range where the price was offered ineffectively. That is, in this rectangle, we see the emergence of liquidity for sale. And to effectively balance that range, at some point the market will move back into it, giving anyone who wants to go short an opportunity. You don't have to look everywhere for these opportunities. It is optimal to look for an imbalance after withdrawing liquidity for a purchase. This will bring you a great variability that your thought will bring you fruits. You'll usually find it when forming a single swing high, as shown here, or when a double top will be formed, as here in this diagram. This does not mean that it should be used only in such contexts. This will be enough for you to start with. This is necessary for you to understand the essence of the imbalance. Remember that there is an algorithm that ensures the efficient operation of the market. That is, the price must be offered equally to both buyers and sellers. How to enter on the basis of imbalance and where to set the stop loss. The easiest option would be to place a limit order in shorts above the shadow of the third candle. In this way, the probability that you will miss the opportunity to enter becomes much smaller. I often started doing this when I started to notice that the ratio of risk and profit increased significantly. In order to know exactly which area will be filled with inefficient pricing, it is enough to switch to a younger time frame and see the exact area. In any case, we put 1 or 2 candles on the stop loss. I will immediately answer a popular question. When does the imbalance lose relevance? After the price has fully reached the top of the imbalance, we can no longer expect a reaction from it. Such pricing is called full fill. When you start analyzing a chart with this paradigm of market perception, you will start to see signs of smart money. These charts show 2 clear patterns that give you a very high probability that they will work. They are easy to use and appear on the schedule every day without exception. If after removing the liquidity to buy, the drop will be sluggish, then I will not be interested in looking at this position as valid. It is important for us to see a sharp drop at which the structure will break, after which we can see the movement of the price in the direction of our balance, and only then can we open a short position. Before practicing on a real account, first perform a backtest. Practice. Understand the context. Now let's move on to the bullish imbalance. It, like the bearish one, is built from 3 candles. The range between the high of the first candle and the low of the third candle will be our area of interest. It will be optimal to use the bullish imbalance when the price before its formation removes the liquidity for sale. Entry into the position will be relevant when the price will return to partial or full filling of the imbalance. In order not to miss an opportunity, we place a limit order at the minimum of the third candle. Based on these patterns, you can effectively trade the bullish imbalance. By analogy with the bearish imbalance, the imbalance is formed when a single swing high is formed or when a double bottom is formed. It is important for us to see the impulse movement on which the bullish imbalance will be formed. After hacking the structure, we will use it to enter the deal.